Talking silver here with Peter and Silver Crown Royalty, and congrats on closing your recent private placement.
Thank you very much, Arne. Congrats to Centurion One that was instrumental in the raise. We managed to close on just over 3 million, so about 3.3 million Canadian, and that gives us now the runway to get to free cash flow. And that's what this was all about. That's why we went public a year ago, was to get that capital base, to get that cash in the door, to close all the deals that we needed to close, to now have relative certainty. And, forward-looking statements, of course, there are circumstances beyond our control, but based on the transactions that we have closed, based on how things are going with our various royalties, we should be able to generate between $2 and $3 million in free cash flow in the context of the market today.
Well, okay, that sounds like a strong position. And talking about capital structure, of course, the financing also included warrants. So could you give an outlook, forward-looking statement on what you think, how the warrants could impact the NAV per share going forward if they are converted?
Well, look, we've listed warrants before, so we can start with that part. And, between you and me and obviously our viewers, there is intent to list those 8.25 warrants as well. We did have some positive feedback from the investors. They'd be happy to see that happen. So, we do have the $16 warrants listed. That's from the IPO. We didn't list the $11 warrants that we issued since then, simply because we didn't have enough shareholders. But now with the $8.25 strike warrants, we would be looking to list those. There is one portion of those, one feature, which is these are the only ones that will be callable. So if the stock trades at or above $11 for 30 consecutive trading days, we can call those warrants in. And there's almost 600,000 of those warrants. So at 8.25, that would bring in not an inconsequential amount of cash as well, which then we could further deploy into additional royalties that we have in the pipeline, or we would have it at that point in time. These are 3-year warrants, and they expire October 3rd, 2028.
Yeah, and you were just talking about the royalties that you're still looking to acquire with the cash that you've now raised. Given that we've had quite a run on silver, we're up 45% this year. We crossed the magic $50 mark. Do you see an impact on still getting good royalty deals? Because normally you would say, well, the best royalty deals are actually done in a bear market and not when we're just having a bull run.
Yeah, I mean, look, it depends, right? Obviously, it all comes down to cost of capital at the end of the day, and a royalty company can give better cost of capital than the equity markets still today. And I mean, especially today when you see a nice healthy correction in the market with silver prices well below $50 again, and gold was down $160, $180 an ounce at one point. The equities are reacting quite negatively. So obviously the cost of capital that was to shrink during this bull run that we've had for the last year and a half, 2 years, has not really materialized. I mean, a lot of these companies are still trading at a fraction of NAV. So, in relative comparison, royalties are by no stretch out of the picture as a potential source of capital for these companies that are looking to expand or maybe spend additional capital on exploration or what have you. So, we've not really seen that. Obviously there are certain factions that will think, silver is going to go to $200 tomorrow. Why should I do a deal with you? Well, that's never going to go away. But thankfully, the pool of investable projects out there is very deep. And because we do trend outside of the mining sector as well, looking at, for instance, recycling facilities and some reprocess projects, we're really the only royalty company that I'm aware of right now that's in that space. So that puts us in a little bit of a unique position there, especially for companies where silver is not even the secondary, not even the tertiary. It's an afterthought in terms of revenues, maybe 1-2% of what they would end up producing overall. So we're certainly very deep in a lot of discussions along those lines. And thankfully for us, these are in good, safe jurisdictions. We're talking North America, we're talking Canada, we're talking Nevada. So these are good opportunities for us to deploy capital.
Okay, yeah, and then you were just talking about trading. So if we look at the market and the prices right now, COMEX and the London Metal Exchange inventories are at multi-year lows. So is this kind of a possible silver short squeeze that we're going to see? Or is it just the long-term trend that's driven by industrial demand? We're seeing record amount of solar deployment in China, for example. So what's your take on this kind of current market events?
I mean, historically, for the last 15, 20 years, and someone else has done the work on this, but gold has appreciated at 9% a year. So to
Hmm.
me, that's the background of currency devaluation, almost like a steady state. If no supply demand balance changes, you should be looking at an appreciation around that rate in any kind of commodity, really, just because that's reflecting the devaluation of various currencies. If we take that further back, we get to about 4 or 5% in terms of currency devaluation. So that's the baseline in terms of the numerical appreciation of the metals between 4 and 10%. And again, last 15, 20 years, it has been 10%. So anything above that, and you mentioned earlier that silver's up, over 40% year to date, some healthy consolidation may be anticipated. Is there a short squeeze that, could have happened already, maybe happened? Maybe that's what did push silver through $50, and that's why it almost touched 55. There's various speculations on this. There's people that will say that the LME is out of physical, that they're flooding the market with paper and hoping to find physical for the 3 month delivery, which they may or may not actually have to satisfy physical. They can just keep rolling the contract. There's all kinds of theories out there. But when it comes to industrial demand and when it comes to supply of physical from actual mining or recycling, well, that's more or less been capped at about a billion ounces a year. And that hasn't changed. In fact, silver production peaked out sometime in 2015, 2016. And that's one of the things that we really like about silver is that it has essentially no price elasticity, meaning that you can have silver go up to $100 an ounce and nobody will produce more of it because it comes out as a byproduct 80% of the time. So you need higher zinc and lead and copper and other prices in order for additional silver to hit the market from primary sources.
Yeah,
In
I
terms
think
of
that it's very important to point out here to the viewers that silver is intertwined with base metal economics. So the more copper, zinc, nickel is being mined, then the more silver you have as a byproduct. But as you just mentioned, just because silver price is going up, no one's going to expand or ramp up production of their existing nickel copper mine as of now.
Exactly. And that's why the physical supply of silver really peaked out around 2015, 2016, I believe. And you can look through statistics for Peru, which is top five silver producer. You can look at Mexico, and that's basically more or less where their peaks in terms of silver output hit. In terms of the demand side, electronics and related are now a majority of silver demand. So you still have obviously some hoarding in terms of, demand for physical bullion, jewelry, things of this nature. But more than 50% now goes into electronics and photovoltaics. I think it's closer to 60% between those two factors. And now with the electrification, not just of, third world countries, but also with the AI build out and all the various data centers, you're going to see more demand for silver. And with these billions of dollars being committed, that only simply to me means that 1.2 billion ounce demand either stays where it is or continues to grow. So you have had this pretty deep divide between supply and demand in terms of a supply deficit into the silver market over the last 10 years now, and definitely over the last 5. I don't see that ending anytime soon. Even if you do have a healthy economic contraction, I still think that there will be, in terms of the infrastructure build out and electrification of not just, AI in North America, but other parts of the world, this demand for silver will continue to be there.
Yeah, and you just mentioned how the industrial demand has picked up and now absorbs about greater 60% of its current silver output. And in the 1980s, when we had the famous short squeeze from the Hunt brothers, it was only around 30%. So, and then at the time, from 1970 to 1980, silver actually went from 150 to $50. So that was quite a different context, a different run than what we're seeing right now. And we just checked when we first talked in 2022 summer, silver was trading at $18. So this is a much more step-by-step development than what we've seen in the 1980s.
Yeah, no, absolutely. And, interestingly, you mentioned that because I was just thinking about it a little earlier. Our share price really hasn't appreciated anywhere near as much as silver has over the last 3 years. When we first started going, like you said, silver was around $18, $20. Now silver is up 2.5 or almost 3 times as much. The first round that we really did for the public was at $4, and we're trading at 5.80. So, there's a little bit of a lag, I will argue, between where the company is right now, how it's valued in the market, and where it potentially should be relative to where the metal price is. Going back to that $2 to $3 million in free cash flow for next year, that's at $45 silver. But even if we were to drop that to say $30 silver, we would be looking at between 1 and 1.5 million in free cash flow, which again would point to the stock being as inexpensive, with companies in the space trading at 20 times free cash flow. That's a 20 to 30 million market cap, and we would be at $35 silver at the bottom of that in the market today. So I think that there's quite a bit of upside here from the current levels. And in our various interviews, I've not stressed this before, but I am now, because again, we are fully funded to free cash flow. We don't have to raise any more capital. That 3.8 million share count does not have to change for us to get to these numbers that I'm sharing with you right now. And again, of course, this is dependent on performance of the various assets that we have. But, I'm more than happy to go into detail offline, walk the reasoning through that, the assumptions behind it, etc. But that's basically what we're looking at a minimum, is $1 million in free cash flow for next year, and well over 3 million. Even in the context of today's market at $45 silver, we should be able to do 3 million in free cash flow next year at the high end of what we expect of our royalties.
Exciting times. Looking forward to 2026 with Silver Crown Royalties.
As are we, Arne. Thank you very much for having me again.